Thank you for joining me. I'm Alex, and we're going to have a look at Anheuser Busch, or I don't even know how you would pronounce that in America, but they make beer, and their ticker symbol is actually Bud, so you know what they do. They make Budweiser. Current price is $81.83, which gives them a market cap of $161 billion. They took a bit of a haircut on Friday, so I was wondering if that makes it a good buy right now. Spoiler alert, probably. So dividend yield is 2% with a payout ratio of 55%, which is definitely not too bad. Revenue $55 billion, slightly down. Earnings $4.4 billion, down quite a bit, but the previous year was only $1.7 billion, so it went from 1.7 to 7 billion to 4.4. Before that was like 2-ish. So growth over the long term, but the last year was a lot better. So PE is 17, which doesn't seem terrible for a company that probably makes products that are going to be bought for the long future, you know. Total assets $232 billion, total liabilities $160 billion, and total stockholders' equity of $64 billion, which is slightly down, but definitely not terrible, and obviously $64 billion is a lot. So 232 versus 160 billion is it's very nice, to say the least. So the company obviously makes beer, and it makes beer that's being bought pretty much all over the world at this point. So I would say that the stock is very safe, and they got a haircut because the earnings report was weaker than expected, but it wasn't terrible. So slightly worse revenue, slightly worse earnings, but still not terrible and still growing. And I'm saying still growing even though they haven't grown last year, but that's a whole different issue. And I would say that obviously a company that makes products like this with the safety of the investment and the market share that they have, growth isn't really their main concern at this point. And I don't think you'll expect them to grow 20% at this point. So to sum that all up, payout ratio and dividend yield is pretty decent. The PE is pretty decent. The balance sheet is pretty decent. And I think that it's a very safe company long term. So I think that considering the safety of investment and the PE ratio, I think it's a very good stock to buy right now. Obviously not for a growth investor, but if you're into dividends and if you're into value investing, I think it's a good company to look into and do your research. I definitely think that it's a good buy right now, especially after they dropped over 10%. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.